always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another episode of Future Financial Strategy, specifically first Monday of the month. You know what time it is. We are going to be talking about the July portfolio updates. We're going into the business. First and foremost, we want to give a shout out to Delta Financial and Delta Investment Tracker app. Definitely a highly utilized tool within my tool belt. If you have not checked into it, if you have not tapped in with them, if this is your first time here, welcome to the Wolf Pack. If you haven't tapped in with Delta Investment Tracker app, you do not have it on your phone, you have not downloaded it yet, you have not tried it out to see if you like it for yourself and your situation, definitely touch the link down in the description to let them know that you heard about them over here on Future Financial Strategies from Reckless Ray Dinero. If this is your first time here, definitely catch a like on the way in, people. Likes help the algorithm. Also, questions, comments, definitely hit me up down in the comment section. I respond to all of my comments. So we can have the conversation down there as well. If you're getting value from this, definitely make sure to take a second and share this information. We're not trying to get rich over here in the Wolfpack by ourselves. Want you to come join us. Want you to be a part of the team. Also, lastly, thank you for being here. Thank you for taking your time to listen to old Reckless Ray Dinero talk about his finances and stuff. Now, last month was pretty interesting. We had a decent run up, and then we had a crash. The jobs report came in. We're going to talk about that a little bit here towards the end. It's going to be my little bonus kicker for you guys. But jobs reports came in light. A lot of stuff came in light under expectation, and the market is reeling. There is a lot of buying opportunity. There is blood in the streets. This is when you buy, folks, when stuff is bad, when people are running away from the investments that you want to be in. If you think that they're going to be around and you are not concerned that those investments are going to cease to exist, because I'm not going to be the one to tell you to invest in something that's going to zero. But the stuff that you don't think is going to zero, for sure, if it's at a better buy point than what you got in, you can dollar cost average down at this point. Obviously, most of my positions, we are dollar cost averaging. But yeah, when people are running in fear, when people are fearful, that's when it's time to be greedy. And yeah, so let's go ahead and get into the business. We're going to add this to the screen. We're looking at the brokerage account first, because I could give you the Dividend Tracker app first, but then people will be like, oh, you're not really showing what's going on in there, and you're not going to show the receipts and the receipts where things are down. Good or bad, we show it all, baby. We show it all. Couple of key things that we did this month while we're looking at the overview here, because we did peak out at 21,000, which I was feeling pretty good about. I was hoping to be able to report on that. We have dropped, but I also had to do a couple of moves. So we are in a trimming phase, unfortunately. And what that means is we are trimming out the, trimming some of the fat, unfortunately. And it's not necessarily some of the fat. It's just there were some additional expenses that I had not foreseen because life happens. We will be doing an episode on life happening, because that is the killer of most people's wealth. And it's the one thing when people procrastinate about making those financial moves that I always tell them, you don't have as much time as you think, because life is coming. Life comes and it gets equally distributed to us all. So, you know, had some life events happen. Fortunately, I have some assets to help me get back within the the realm of what I consider safety as far as the debt is concerned, because I do have a threshold where it's an uncomfortable amount of debt. I don't sleep well. And it started crossing over into that threshold. And like, if I got to think about it all day, like, hey, how are we doing the math to make this work? What are we doing? It's not that I don't have the assets to pay it back, but I don't like letting it get outside of the scope of having the assets to pay it back if necessary. And considering we are on a debt consolidation binge right now, we're trying to get rid of all the debt because I got some other things that I want to do with that credit, that debt, that additional income source, if you would, to further my plans, to further my mission. And so with that said, it's like, I don't want to be sitting around waiting for those opportunities to come to me. So I want to go ahead and create them. So we're focusing on getting rid of the debt. I've stated this many a times already. We're doing it early in the bull run. Normally we have the ability to do that later in the bull run, and we'll run the debt up. And this bull run hitting a little bit different. The financial ecosystem's hitting a little bit different, and some of the lifestyle changes that I want to make are hitting a little bit different. And I just don't want to be in a position where I'm carrying debt. Like a couple of the other things that I want to do as far as carrying the consumer side of the debt, like asset debt, I can carry asset debt. But like the consumer debt, I want that gone for sure. But I want all the debt gone because I want a blank slate, so that way we can start rolling out and using some of the future financial strategies that we've been working on over here on this channel on a bigger scale, because now I am ready to start scaling up these strategies. We have verified the ones that we are utilizing. By and large, we haven't missed as of yet, which honestly goes to my assumption that I think all plans implemented, if you implement them in the way that they are supposed to, if you use the tool appropriately, they all work. But now we're at a point to where I have a couple that I like to use that I'm comfortable using now because I've used them a few times. And I want to scale them. And that's not scaling them to the hilts, but I'd rather have no debt and use more debt to acquire assets. Because like I said, the pivot now is we will no longer be using debt to buy things. We'll be using debt to acquire assets by and large. And so what we're doing currently is getting ourselves into that realm. We're getting ourselves into that space to where it's all money in. We use debt to supercharge the asset acquisition, and we use that to build out our portfolios in a faster time frame than if we were just doing it the standard way of just budgeting 10% out of our paychecks. So with that said, we are down right now. I mean, the numbers at the top are fudged because this says we're up 316%. We're not up 316%. It's counting money that has been added over the last 6 months. I don't like this metric. I hate that they count me putting money into the account as money coming into, like, as though we're like things aren't down bad. Things are down bad. But we sold off our Nvidia position. We sold it off at a loss because we're gonna tax loss harvest that. But I also needed the money to get that back into the retrospect. So that was our trim from our end. We're also looking for all other pools of stagnant money / not highly utilized money / money that's not doing what it needs to do to get us where we need to be. And we're trimming all of that. We're also laser focusing and using the velocity banking strategy, our income, to crunch down these debts. So like the additional debt that was accrued is going to be done this month. I thought it was going to be a 2-month issue. I found out that our income had gone up almost $1,000 because this strategy of building up an income base and using that income to pay back debt with an asset that produces income is working. So we're going to jump into the income portfolio because that is the main portfolio. That's the main thing driving this right now. Obviously 8% down. Now that's not necessarily 100% accurate in considering that we've been getting income generated, and the income that we have generated within this portfolio, actually we're probably closer to like maybe if we're down at all 1%, because like we've been pulling some income off of this, and I know that we've gotten over $1,400 out of this account. So that actually, this is all usually going to be red because we're not 100% reinvesting back into the fund. We're only bringing back in, well, we're going, actually the metrics on that are going to be changing because like now we have use case positions. But right now, as you can see, we're sitting in Coney, Misty, Nvidia, and Ulti. Now, the major changes that we've had go on in this portfolio is I have been, as this has been running up, we've been pulling the profits from Misty. Now, while we're doing a minimal amount of reinvesting, what we are doing is we're managing these positions. So the goal for me, and I understand a lot of people are like, yo, I'm going for $1,000, not $1,000. I'm going for 1,000 shares in these positions. I have no share metric whatsoever. I am going based on the dollar metric. Now, what we are looking at here when we talk about the Misty position is that's supposed to be at $10,000. When it drops to $9,500, we start buying back in. We are currently sitting at $9,000 because of this dip. So now we are at a metric to where all money that goes in here will be going into buying shares of Misty again to get it back up to above the $9,500 threshold, which is the bare minimum, goal being 10,000, but these fluctuate. So the other side of this is as Misty clips up to 10,500, we are selling off shares and we are moving that into the next strategic position. Now, currently we are looking at getting 400 shares of Ulti. This position we've been adding to. So we've been clipping here from Misty. We've been adding into Ulti. Reason being is Ulti is going to be my investment fund, if you would. So we're going to get 400. Our goal is to get 400 shares of Ulti. When Ulti pays out every month, that goes back into this self-sustaining this fund. So the Ulti shares, if we get $400, so like the reason I'm doing this is because Ulti is supposed to be at around 100% or above 100%, which means within a year you get your initial investment back. It's also a diversified position because it has a different level of exposure than some of the other projects. So the reason what we're using Ulti as a tool is a reinvestment tool. So starting this month, which will be the month of August when this is being recorded, when Ulti pays out, that's going to go wherever it needs to go within these three positions. So Misty is our number one. Our number one position, this is our core now. We nixed the YBTC position because we are overexposed in Bitcoin, and that was Bitcoin directed, and it wasn't performing the way that we needed it to, and the payouts were wild. They were either really great or really abysmal. So that is moving to a later phase into this portfolio. It will have a smaller touch on this portfolio. Misty is the big dog now. That is our main position. We were going to be following that up with Coney and Nvidia, and both of these, the goal is to get all three of these to $10,000. As you can see, Misty, I'm going to say that under normal market conditions, when the market bounces back, we will be back in the realm of $10,000 easy. Coney, between Coney and Nvidia, I'm not sure which one I want to do next because it'll probably be Coney because we are still following our Bitcoin narrative. But the reason we dropped YBTC is because I am a Bitcoin holder. I have implemented a Bitcoin standard within my finances, which means 5 to 10% of every dollar that comes in goes into Bitcoin and gets locked away for hopefully never use, but securing our wealth indefinitely. YBTC was a direct Bitcoin derivative, and it's kind of a wild card. I have it in other portfolios, but within this portfolio, my goal here is to maximize income. And so that was not an income maximizing play. So we have Coney and Misty that have stepped in. Those are going to be my income Bitcoin related plays unless I find some unless I find something that, I mean, I might bring back in a Bitcoin direct play, but we will see. But it's going to be in a separate phase. But phase one, it's Misty, Coney, and NVIDIA that are going to be phase one. Now, when we start rolling out phase two and bringing those in after we get all three of these to the $10,000 metric, we'll be looking at the income that we have coming in. Most likely by that point, the debt will be cleared. And we will be pivoting because obviously our end goal is to get our velocity banking filtering in through this portfolio, which means that every dollar that comes in just goes into this portfolio, and then we get monthly paychecks and or weekly paychecks, depending on how we phase this out, that are going towards paying our living expenses. Reason being is if I can get it pivoted into that retrospect until I leave the job market, I will indefinitely have this portfolio going up in value, buying more and more income, because we're doing our investments out of this. We're doing everything out of what I'm budgeting out. So like none of the investments are going to be missed. We're going to be looking at what we're doing as far as reinvesting. We're also reinvesting in this portfolio. This portfolio is going to feed all the other portfolios. Now, what will likely happen is once I get to that point, once I get to the point where the debt's cleared and I can shift over to this portfolio to cover the monthly expenses completely, I will have probably one more year in the workforce where I'm going to grind it out real hard. Like I might do some side hustling. Like I might have a 12-month span where I just kick in as much money as possible to get this as built out as possible. And then, we're going to start doing the traveling thing. Now I'm targeting 24 to 36 months is what we're looking at now because of the way things are going, like barring any more extraneous life happening. But we took the couple of hits that we got really well. But that's the goal, is to get our velocity banking going through here and proving it out that it works, and then being able to do some of the stuff where we're traveling out of the country a little bit more and then maximizing our investments that way, because we can go live in an area that's way less expensive than the United States for a couple of months at a time, and then maximize our investment that way. Because if I'm pulling in $4,000 a month and it's $1,200 a month to do everything I want and live like a king somewhere else for a couple of months, take a breather from the rigmarole and the rat race in the United States, and then just come back and get at it for the remaining 10 months and continue to feed this portfolio, because that's going to pay for everything that I need, and my expenses are down, then I'm going to look at doing that. So that's the goal with this. And we're getting there. We're making some headway. So what I'm going to bring up next is we'll jump into the Dividend Tracker portfolio. I've got this updated to match. Now, one of the things that you'll look at here is we're looking at, this is what I use to kind of project out, because this is a very simple tool. I've got a link down in the description for Dividend Tracker portfolio. Down in there, if you guys want to check this out, it has pro features where it kind of has the community aspect. It gives you insights into the dividend positions that you have into those stocks. It has dividend grades on these stocks as well, on some of them, which is locked feature on here because obviously we're using the free feature. But as you can see, everything that we've got in here is over 100%. And I understand that people will be like, oh, that's high risk, blah, blah, blah. But like, again, this is to maximize income. I'm distributing and utilizing the income off of this. This is not necessarily 100%. Actually, it's very minimally percent focused on the growth of the positions, because out of this portfolio, we are also investing from this portfolio into things that we're hoping grow. That's the first thing. But as you can see, the portfolio has a dividend yield of 106.8% at present based on last month's payouts. Yield on cost is 97.72%. The August income projection, that's what they're projecting for this month, because we haven't hit any of those declaration dates So we still have a little bit of time to buy. It depends on when these pay out, but I'm dollar cost averaging. I understand a lot of people are catching it on the EX dividend date. But since I'm trying to get income, if I can get in before that to where it's recorded so that I get the additional income, I am going for that. But based off of last month's metrics after we got the numbers pulled up here, so obviously they're projecting out if everything pays out exactly what it paid out last month, which it probably won't. This number is highly variable. This is a variable number. That's the reason I'm initially shooting for the $10,000 in each position. And we'll see what that looks like. And then we'll probably be looking at 500 to 1,000 shares in each position. Most likely 500, because if I've got 500 in each of the 3 core positions, then as long as we're over $1 on each position, we should be within the bare minimum of what I need. And that's what I'm looking at for the phase 1. So phase 1 will probably start off getting 10,000 in each of these. And then we'll start looking at building into that as we go. But yeah, we're looking at $1,339.55 is what they're projecting. The goal, the bare minimum, the first steamroll metric goal for me is 1,500, because that's the bare minimum of covering all of my core, cut into the absolute quick bills. Like I could keep my, like all my utilities, I could pay for everything. I would just have to go out and basically be grinding for food at that point, but everything else could be paid out of the dividend portfolio. And what's that turn into as a net annual income? That's $16,74.61, which is nice. That's a good breakout. Now, a lot of that is because this portfolio is actively managed, and I'm actively managing it around that $10,000 metric. If we hit 10.5, I sell off a few $100, invest that into Ulti, which is our strategic position for the portfolio. We're looking to get to 400 shares of Ulti as quick as possible. Dollar cost averaging, of course, which is good because I started buying in high. It has dropped. And so we're managing that. If they do the reverse stock split, then we're going to have to buy some more shares, obviously. But we'll see what that turns into. Like, that's just what I mean. But this is like specific to this portfolio. That Ulti position is going to be what we're utilizing to reinvest into this portfolio. So Ulti is going to pay for a lot of these positions, including the income that I throw into it that I'm working for. But the Ulti position is making sure that the portfolio is self-sustaining. So as I'm focusing in on clearing the debt, as we're focusing in laser focused with that income, all the income going to getting these debts handled, I'm putting in a backstop, so that way if I don't put any money into this portfolio, when Ulti pays out, that goes back into this portfolio. And so that way we're constantly reseeding and building up that income stream until we can get all the income coming into this portfolio. And then that's going to be a game changer, because we'll start seeing the numbers go up very fast. And I've already noticed it when we did the end of month finances, which has been released. You can go back and check out the July financial breakdown. The one thing that came out of that was great was the income increased $1,000 last month. Now, it'll be interesting to see what the income increase looks like this month, because we're using the tools. We got the in-home banking. We're actively utilizing that regularly now as part of our velocity banking strategy. Like, that's one of the things that we're using as kind of a battering ram to get like an additional chunk of money every month. And doing that puts us, it's starting to change things, because now I've got money going into the in-home banking pool. Like, we're building that out. And then after the in-home banking pool gets to a certain level, that in-home banking pool money will go into funding this portfolio as well, which is going to be really interesting. So we've got a lot of stuff going. We've got a lot of momentum. We've got what I'm looking at the beginnings of a really great income snowball. That's what I'm going to call it. I'm coining it an income snowball. And the funny thing is, unlike a lot of these a lot of the people in the space, I haven't seen too many. Actually, I haven't seen anyone who's actually utilizing this the way that I am currently, because we've got a bunch of different strategies and we're piecing those different strategies together. And then I'm realizing that the high income space, these high income portfolios, can really be used as a tool to fuel and hypercharge those other strategies, which I'm a financial strategist at heart. I geek out about this stuff. And so I'm really liking the results that we're getting. And as this income snowball starts to build up, it's going to be really interesting to see what we can do and what we can accomplish with it. Now, before we close out the show, I want to talk about what's currently going on, because if we got something that's currently happening, we have a major market downturn. And so one of the things that I wanted to touch on before we get out of here is like, why? Because it's everything. Crypto's down. All the portfolios are down. Like all of my portfolios across the entirety of my portfolio, it's just red everywhere. And I wanted to talk on why. We had a weak earnings report. That's the first thing. Major companies such as Amazon and Intel reported disappointing earnings and outlooks. The transition to AI has proven costly for these companies, leading to significant declines in their stock prices, which awesome for us because these are buying opportunities. Like there's no, like, if I don't think Amazon's going anywhere. If Amazon's a long-term holding for you, kind of you're set and forget, dollar cost averaging now, these could be good entry points. There's concerns about the labor market as well. The latest jobs report showed that the non-farm payrolls increased by only 114,000 jobs in July, significantly below an expectation of 175,000 jobs. Now, the Fed was wanting this. They wanted us to not have jobs. They're actively against us. That's the reason they needed less people working to bring inflation down, because they need people unable to buy stuff. Seems like they're doing a really good job of that. Like the unemployment rate rose by 4.3%, the highest since October of 2021. Sounds like mission accomplished, guys. Like, okay. They wanted to slow down the economy. The economic slowdown indicators. Other economic indicators have also pointed to a slowdown. Manufacturing activity dropped by an 8-month low in July. And there were significant increases in the number of Americans filing new applications for unemployment benefits. This is what the Fed wanted. This is what they wanted. They called for this. They said, we need less of you working. Less of you are working now. This is a terrible time to lose your job. Don't get mad and quit. Don't make an emotional decision and quit. Terrible time. Terrible timing, especially if you're the type of person who isn't self-motivated, isn't a self-starter. The markets are bad. Jobs markets are bad. Places are not hiring the way that they were. Like, you can't just go conjure up a job. Got to know the environment that you're in, people. But this is what the Fed wanted, so that we could lower interest rates. Which brings us to number 4, Fed policy and interest rates. Investors are increasingly concerned that the Federal Reserve may not act quickly enough to address the slowing economy. Although the Fed has hinted at potential rate cuts in September, the current high interest rates continue to weigh on the economy. The prospects of a delayed response from the Fed added to market volatility and uncertainty. 100%. Because the Fed is not in front of any of these problems. They're on the back end. They do something, and then months, years, a year later, we find out what the result of it was. The Fed hiking these rates up and continuing to hike the rates up because they were like, inflation isn't going down enough. Hike the rates up more. Hike the rates up more. Hike the rates up more. They didn't let the rate hikes actually take effect before hiking the rate again. They just hiked the rates up a bunch. And from the looks of things and from the concern that we're having in the market and from the way the economy is going, they hiked the rates too much. The simple fix would have been, hey, we just can't afford to go to war with everyone. We can't print more money. They could have done that. They didn't want to do that. They want to finagle the rates. And this is the reason why sound money is the only money, the only thing that's important. I understand that we deal in dollars, and dealing in dollars is one thing, like that's fine. But that is not sound money. They're playing this game with it. And they're making these drastic decisions without letting the results happen, and they're overcorrecting. So now when they start dropping rates, they're likely going to overcorrect in that regard too. Difference being is when they overcorrect, that's going to benefit us, because over here at the Wolfpack, we're going to look at that opportunity. We're going to take all that debt and we're going to buy all the assets. Everyone else is going to go buy things. We are going to be buying assets. We're going to be loading the boats. We're going to be getting into position. We're going to be making all kinds of money. And then after they overcorrect and have to raise rates again and crash the economy and do all these things, we're going to be even further onto the benefiting side, because we're on the benefiting side now. Believe it or not, it's inconvenient, it's hard, it's scary, but those of us who hold assets are on the benefiting side of this, as long as we don't let our assets go. So we want to clear debt, hold assets, use debt to buy assets, and then, eventually get into a space where we're using our massive incomes that we're building to buy assets. Last reason for the current economic volatility / crash that we're going to: high valuations and market corrections. The market had been experiencing high valuations, 100% we had. Stuff had been going up. We thought it was going to go up indefinitely. NVIDIA did their stock split, reshuffled the deck, killed their momentum. Now we're seeing the crash from that. AVGO is doing the same thing. Same thing's probably going to happen for a little bit with MicroStrategy, but I'm scooping up some MicroStrategy. Like that's going to be that's a long term for me, and it's one that I want in my portfolio, and I want as much as possible. So we're going to be gathering that up, particularly in the tech sector. The recent disappointing earnings and economic data have triggered a correction, with the NASDAQ composite entering a correction territory, defining as a decline of 10% from its recent high. These are opportunities to buy in. If you are dollar cost averaging, you're getting more shares now if you're dollar cost averaging the same amount every time. This is a natural flow. Nothing goes up for forever. Everyone freaks out so bad when we have corrections, or the numbers don't just indefinitely go up, as though stuff doesn't have to go down. But over here at the Wolfpack, we know what that is. That's called opportunity. Those are called fire sales. We will take the positions from those who are not educated enough to know that when they should be buying and when they should be selling. And we will capitalize on that, and we will win. So until next week, family, if you got value from this, definitely let me know down in the descriptions. Let me know your comments down in the description. Let's talk about it. Let's talk about the portfolio. I'm sure there's some detractors in there that are going to come in and be like, oh, you're losing money and you're going to lose all your money, and this isn't a great idea. And I want the smoke. I love having those conversations, because we can mine that out down in the comments. So leave me a comment. Definitely like, share, and subscribe if you haven't already. For those of you who have been in here ghost watching, give me a like on the way out. Actually, give me a dislike on the way out. Give me something. Give me something. Let me have something. But until next week, family, for this show next month, when we do the portfolio update from next month, I'm going to be making a bunch of moves. I'm going to be telegraphing the moves. I'm going to be talking about the moves, and we're going to keep it pushing. Until next month, it's your boy, Reckless Ray Dinero. We are out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.